Yeah. So before, I was looking at names and I was waiting for like quarterly earnings to come out, or like credit card data or certain data to be like, how can I update my model and what's my view on where the credit is trading and why is it trading that way? What capacity does the firm have to like actually put on more debt or less debt? Can they pay out dividends with the existing cash? And what does that mean for the underlying securities? Now my job is a lot more structuring those deals to begin with. And so a lot of times we have companies come in that don't have publicly traded credit, but for one reason or another, they can't refinance, but they need debt. It can be for refi, it can be for M&A, it can be for dividend recap, and they'll come to us and say, here's our business, here's our credit. What are you willing to lend to us at? And so we start from a lot more the ground up, where you have to actually develop the model for the company. You have to make your DD list, and you're going to be like, well, here's the things I need to know, and you can kind of pick for whatever you want. Be like, here, I need to like know these things, and I need this historical data, and they'll provide that to you, and you incorporate all that in coming up with the leverage read and coming up with the pricing read. So rather than saying like, oh, the bond in the public market is trading at like a 10% yield, and here's what my model says, and here's what I think it could be valued. It's more like, well, if you give me this information, I might be able to give you 4 times leverage at L plus 700. And in that process, you're also structuring the docs. You're also structuring, and by docs, I mean the credit agreement, and what are all, the levers that a company can have to lever itself up, the dividends it can pay out, things like that. And so don't get me wrong, it's still super competitive because a lot of people are trying to do this. And when capital is cheap, you really don't have as much a competitive advantage either. Your competitive advantage a lot of times is being cheap or being at a very big shop where you can do $500 million in a single deal. That will frequently win you a deal. Someone can come to you and say, yeah, I can put $600 million and do the entire deal for you. But the job in my view on a day-to-day basis was a lot more keeping the trains running, a lot more like blocking and tackling, a lot more structuring a deal. And so I liked that aspect more than kind of waiting to see what happens in the market.